Governments run countries, but who runs the global economy? The global financial system is shaped by powerful institutions that most people rarely think about. Welcome to Wallet Economics, where we break down the hidden systems that shape money, markets, and the global economy. If you find this useful, subscribe and like the video. Here's what we'll cover: central banks, the IMF, the World Bank, financial markets, and the real power structure connecting them. We'll keep it clear and practical: how decisions in far-off boardrooms shape interest rates, currencies, jobs, and growth. Because these forces affect everyday life, from your mortgage to gas prices to the jobs in your town. Let's start at the core: central banks. At the core of nearly every modern economy is a central bank. These are not where you deposit your paycheck. They're the banks for banks and for governments. Their job: manage the money supply and the price of money through interest rates. When they lower rates, borrowing gets cheaper. Companies finance new projects. Families get mortgages for new homes. Spending rises and the economy accelerates. Raise rates and borrowing costs climb. People and firms save more, spend less, growth cools. Why slow things down? To control inflation, rising prices that erode purchasing power. Central banking is a constant balancing act. Some central banks have outsized influence, especially the US Federal Reserve. The dollar is the primary reserve currency. Much trade and debt are in dollars. When the Fed moves rates, effects ripple worldwide. Governments and companies feel it. From Brazil to Indonesia, borrowing costs and exchange rates can shift. Investors watch every word. The European Central Bank sets policy for the Euro area, the Bank of England for the UK, the Bank of Japan for Japan. Announcements can move stocks and currencies overnight. Central banks are the quiet heartbeat of the financial system. What happens when a country faces a severe economic crisis? Debts unpaid, currency collapsing. The International Monetary Fund steps in. Based in DC, the IMF is a global financial firefighter. Emergency loans stabilize currencies and buy time. They can prevent crises from spreading across borders. But money comes with conditions: reforms, spending cuts, tax changes, privatization, openness to trade. Supporters call it tough but necessary medicine to restore confidence. Critics argue austerity hits ordinary people hardest and can trigger recessions. Debates also focus on governance and whose interests shape policy. Powerful and controversial, the IMF shapes crisis outcomes. In the best cases, reforms lay groundwork for recovery. But trade-offs are real, and the debate continues. While the IMF manages crises, the World Bank focuses on long-term development. Its official goal: reduce poverty. It funds specific projects: roads, schools, clinics, clean water, less firefighter, more builder. Highways connect farmers to markets. Power grids bring reliable electricity. Schools and healthcare expand opportunity. It comprises the IBRD for middle-income countries and the IDA for the poorest nations. The right project can alter a country's trajectory. Critics warn of debt, displacement, and environmental risks. Despite debates, World Bank financing underpins growth in many places. Beyond institutions lies a more chaotic power: global financial markets. Not a single entity, but a vast network where trillions move daily. Stocks, ownership in companies traded every second. Bonds, governments and firms borrowing from investors. Currencies, prices of money itself set in real time. Capital flows like a global ocean current. The main actors: pension funds, insurers, mutual funds, and banks. They chase returns across borders. Confidence brings investment and booms. Fear pulls money out. Capital flight. Currencies drop, markets tumble, borrowing costs jump. The herd can follow data, or panic, greed, and rumor. That's why governments and central banks watch markets closely. Markets are decentralized, unpredictable, and immensely powerful. So, who's really in charge? No one. There is no secret room controlling the world's economy. Power is distributed across a complex, dynamic network. Central banks, the IMF, the World Bank, governments, and markets, each with distinct roles. A system of checks and balances. Without a formal constitution, actions trigger reactions. Rate hikes, capital shifts, loans, and market responses. History matters, dollar dominance, voting power debates, and calls for reform from rising economies. The global economy isn't controlled by one power. It's shaped by a network of institutions, markets, and policies. And, Understanding these systems reveals how the modern economy really works. If you want to understand the system, subscribe to the Wallet Economics channel.